Trading psychology, is it really important or just a bunch of babble? I can't even tease you. It's really important. Hey guys, Akil Stokes here, and welcome back to another Forex market preview video. If you are one of our, 85,000+ subscribers, I just want to say thank you for tuning in each and every week and supporting this video. And if you guys are brand new, this is a weekly Forex trading video that we put out to you guys here at Trade Empowered in hopes of giving you some tips both on the technical side and the trading psychology side. Today we're going to talk about a few things. I'm going to show you guys a rant at the very end of our video here today from our live trading room. I got the question on Twitter, or maybe not the question, the statement on Twitter that trading psychology was pointless and you guys are just blah, 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 blah. So we talked about that a little bit. And on the technical side of things, when we hit the charts, I'm going to show you some trading opportunities dealing with structure and kind of talk about how to go about, well, I guess why the skill of reading a price chart is very important when it comes to picking smart targets. But before we get into that, I do want to get some things out the way. First and foremost, I have been nominated for Forex Trainer of the Year over at A to Z Forex. There's a link first thing in the description box below. It would be a massive favor if you guys would go down there, click that link, head over, scroll all the way to the bottom and give me a vote. I think I'm either in second place or maybe tied for first place right now. So it would be very cool if we can bring this victory home for the Trade Empowered team and of course you guys, the Trade Empowered community. You can vote up to once a day. I believe it closes on February 1st. So let's see if we can rally the troops and get out there and get ourselves a victory. There's nothing out of it. There's no money or I guess trophy or anything like that, but it's a competition. I'm a competitor. I like to win. So any chance I get to win, I'm going to go for it. And it gives us another battle to go after. We sit together, many of us, and battle the markets each and every day in the live room or each and every day in the syndicate. So this gives us another fight that kind of distracts us from that as well. Also, note down or write down in your calendar, I think it's the second week of February. I'll get you some exact dates later, but you may want to consider freeing up your schedule for the second week in February. There is something very, very big coming. In fact, it's bigger than big. It's massive. Something that we haven't done in years, and it's coming very, very soon. I can't tell you much about it right now, but if you're on our email list, that means if you go over to tradeempowered.com, click that Learn to Trade tab and fill out your email list. And of course, if you're getting this email for the Forex market preview, it means you're already on it. But we're going to be mailing out some stuff pretty soon describing what's happening on that week. But I'm telling you, you don't want to miss it because it may be your only chance for another few years. So now that we got that out the way, let's head over to the charts and let's talk some technical analysis. So aside from the Forex market preview videos that I put out each and every Sunday, I also do a daily trading blog over on my personal YouTube account. You can just enter Akil Stokes and it should come up. Or if you're over on the Trade Empowered page, just scroll down. You'll see our playlist, all my best stuff, Forex market previews. You'll see the Akil Stokes playlist right here as well. And I try to put out this daily blog for a few reasons. One reason is it gives me a chance to self-reflect. This is my way of journaling, reflecting on the day, really closing out one trading day and resetting for the next day. But it's also something that allows our followers to kind of see what it looks like inside a trader's brain. And this is something that I did before I was teaching other traders. This is something that I did during the beginning of my trading journey where I would journal, I would write a blog post, and people started liking it more and more. And that's actually what got me into coaching. I remember Jason Stapleton, who's my mentor, he was keeping up with the blog post and he said, "This content is awesome. You have to share this on a bigger scale." I didn't really want to at first, but eventually I ended up getting into coaching, and obviously it was a great decision. But something I mentioned in our blog post, and I guess if you've been following them up to this point, you know that the first 2 weeks of this month have been horrible for me. It's been one of the worst drawdowns that I've had. It stinks that it's in the beginning of the year. And I've kind of been walking our traders through how to deal with that. And there are different ways to deal with drawdowns. There's different ways you can do evaluations and whatnot. But one of the biggest things is mentally, on the mental side. And when you're in a drawdown, when you're starting to lose confidence or things get tough in your trading, one of the best things that you can do is to go to your best trade. Find that go-to trade. And I like to really compare that to, athletics and sports. I'm a big sports junkie, if you guys didn't know. And I remember in my basketball days, let's say I had a game where I was just missing everything from the outside. No shots would fall. I'm airballing three-pointers, what have you. One of the things that my coaches would do is he would set up plays in order to get me easy shots. So he'd set up plays. He would say, Akil, hey, drive to the lane, try to get an easy layup, an easy dunk, or try to get fouled, because those are much more high percentage shots. And once you start to see that round ball go through the hoop, right, it starts to build confidence in yourself, which is much needed for many people during a drawdown. And I do the same thing with my trading. I try to go to my go-to trades, which are, for me, it's structure-based trades, something that is right there in front of your face. We like to call it when the money's laying on the table for you. Very low risk and potentially high reward in some cases. And that's kind of what I did all week. And I'll show you a few examples of what we took before getting into another potential setup. One came here on the pound dollar. This was a pair we talked about in last week's Forex market preview. Obviously, the advanced pattern formation didn't complete because of the gap, but we did have a very nice structure trade right here as price action, right, retraced back in the previous structure looking left. And you can see we got a nice little pullback right there. We had one on the Aussie dollar as well, Australian dollar. This one didn't work out so well. We had the same type of deal here, right? Price action put in a new structure low. We retraced, look left, structure leaves clues. However, we got a small retracement, but then price action blew through and stopped me out. We also had one on New Zealand dollar here, and this one worked out pretty well. Same thing, price action put in a new structure low. We retraced, look left, structure leaves clues, got a nice little pullback and made some money on this trade. And there's even one on silver that I brought up to our syndicate members. I don't personally trade silver. I have some hard asset investments in silver, but I don't actively trade it. But you can see the same type of deal right here, right? New structure low, outside return, pulled back in the structure, and this one looks like it would most likely still be in progress. I didn't look at this too deep because I don't trade it, but it doesn't look like we pulled back all too much from those highs. But the point is, for me at least, these are kind of my go-to trades. They're very safe trades. Again, the risk is very low because you're right at previous structure. You know exactly where stops need to be if you're wrong, and the reward can be potentially high. And I say potentially high because it all depends on the setup, right? No setup is going to be the same in Forex. There are going to be different ways to attack each trade, and that's kind of what I wanted to talk about in today's Forex market preview video. And I've been reading this book. I had a day trip to New York on Friday. A day trip that turned into an overnight trip, I guess you can say, on Friday. And I started reading this book that's been on my to-read list for a while now. It's called Street Smarts by, I think it's Linda Ratsky. If I butcher her name, I apologize, but it's an old school book. I think it came out in the mid 1990s, 94, 95, somewhere around there. But it talks about some classic charting techniques for day traders, not specifically to Forex, but a little bit about technical analysis and whatnot. And I'm reading through this book, and it gave a very good quote that reminded me of one of our traders. Let me just see if I can, I know I put it on the Twitter, so let me see if I can remember it. Go through my deal here. By the way, perfect time to shameless plug myself. Oh, are we trading De La Feo? Oh, we are. Okay, loading them out. All right. Anyway, go to my Twitter. Right, you can follow me at Akil Stokes RTM. Right, and where is it at here? I'm trying to remember what I did. Where are my tweets at? This is all the stuff I've retweeted. Our swimming team senior day. Reading a book, Thar said, obviously I can't spell, that's why I trade and I don't write. And here's the quote from the book. It said, "This is not a long-term trade, just a quick thank you very much." And it reminded me of one of our clients that we work with, Gabrielle, because she's always got funky names for these setups. But the point is, you want to know what your trade can produce. You want to be smart about taking targets, because a lot of traders will get themselves into trouble. They'll do everything correct. They'll have the right entry point. They'll have the right stop in place, but they will fail on where they take targets, which makes the trade kind of pointless. And what I mean by that is, maybe they'll see a situation like this, right? Where they say, here's previous structure. I'm going to enter right here, right? Stops are going to be above previous structure highs. So let's have our entry right here. Stops going to be above previous structure highs right here. This is safe because, look left, structure leaves clues. If we get a higher high, higher close, it invalidates the move. And I'm going to shoot for targets all the way down as an extension at previous structure lows right here, right? And let's say that they enter the trade, it starts to roll in their direction. Right, maybe come down to this level, and then boom, it explodes up and extends, and oh man, I'm stopped out for break even, or I'm stopped out for a small loss. Where maybe this was an instance where they could have achieved some targets, and a lot of that depends, or a lot of that comes from knowing how to read a price chart and knowing when to shoot for bigger targets, when to shoot for those just a quick thank you very much, sneak your hand in the cookie jar and try to steal some crumb type of moves. And that's one of the biggest difference between trend following traders and counter trend traders. Typically trend following traders or trend continuation traders, what have you, are shooting for a bigger move and extension, while counter trend traders or failure traders, they're just shooting for a small correction in the market. They're trying to get a little piece out. They're not trying to call a full reversal or anything like that, or a full extension. They're trying to get a little piece out of the market and then, put some profit in their pocket and then look for the next opportunity. And I think a lot of traders kind of are confused with when to do which. And I see that a lot, where traders will take, again, they'll set up good trades, but they're just wrong on the target area. And that gets them into a lot of trouble because they miss a lot of potential profit there. And that all starts with knowing how to read a price chart and knowing when to expect the market to do that. So I want to do a little test here. And this is probably a perfect example of what a trader may look at. So let's erase all of this stuff here, and let's take a look at the most recent move in price action, right? So if we draw out our price action, right, this is going to be our initial starting point. Why? Because this is the first part I see on the chart, right? It doesn't matter. There's never going to be a true initial starting point, guys. Overall, well, I'll get to that later. There's never going to be a true initial starting point unless you look for the first trade ever, right? The first quoted price ever. But you're looking at a move like this, right? Swing low to swing high. Let's say a trader is looking at this as being the move. Swing low to swing high, outside return, new structure high, right? The market's moving up, moving up, moving up, moving up. Got a little outside return right there. We're moving up. And then boom, we come here, right? I'm not sure if you guys can see this orange. Hopefully you can. I'll change this to black right now. But boom, you're right here, and you have a violation of previous structure lows. Am I right? Price violates previous structure lows, and then we get this rotation, right? We get an outside return, we get a new structure low right here, and boom, we're in a bearish trend, right? Give me a yes if you guys would agree. Actually, well, we're not in the live room, so just maybe I'll do a poll question, right? There's a poll question in the top right hand of your corner, right? Answer that poll question if you agree. We are now in a bearish trend because we have that series of new structure low, outside return, new structure low, and now this is simply a pullback, right? A retracement of the underlying trend, and we should expect price action to continue all the way down, at least testing previous structure lows right here, and probably extending a little bit lower, right? So that's a pretty good trading opportunity. It kind of just showed you the good risk reward here, right? Stops can be above here. Targets can be, let's say we're conservative, targets can be about here, right? Boom, perfect. If you said yes, you're wrong. And I'll tell you why, right? Let's take a different look at this market. I'm sorry, I teased you. I'm sorry, I fooled you. I tricked you. But I had to make sure you gave me an honest answer, because some of you are just going to agree with whatever I say. Let's look at this again. And again, if we take our price action, look at this. Here's our previous structure high right here. If we want to call this our initial structure high, we can. I'm not even sure if we have a higher high, higher close, maybe by 1 pip, right? We have our outside return right here. This right here, this is not a new structure high. This is not an outside return because it doesn't meet our principles for what they are. If you guys have seen into the gray, you know that we need that higher high, higher close in order to have a new structure high. We don't get it here, right? Our new structure high is actually going to be right here. And some of you, if you're in a 12-week transformation, we talked about this on Monday. So you're sitting back like, yes, got it. Woo, right? You're excited. Others, this may be an eye-opening experience for you. But this is going to be our new structure high right here because this is where we get our higher high, higher close. We don't get it right here. Therefore, when price action comes down here, is this going to be a new structure low? It's not, right? Because this is our previous outside return. So whereas in the past, you're looking at this being a complete bearish trend and expecting a rollover, a continuation of that trend, you may not want to be so quick in doing that as we have no sign really that we are in a bearish move. It's more so just consolidation. We do have a bearish rotation. That's what I like to call this right here, a bearish rotation where we break our previous structure lows. But until we get that confirmation, so something like this, until we get that confirmation in that form of lower lows and lower highs, right? It's probably not a smart move to shoot for a full extension because we just don't know. This can easily continue consolidation. We can easily come back up, break this level and retest these highs up here. So in a situation like this, it's probably better to take more of a conservative target approach. And you can see that. Let's just go down to our 4-hour chart real quick. It's probably a little bit better to say, instead of going right down here and shooting for a move all the way across, which is probably a little bit optimistic, hey, with at least initial targets, maybe first targets, let's get off at the first sign of danger, which may be this little hiccup right around this 99.50s level, right? So again, the goal is, the key, and I went through that quick. I know reading a price chart isn't easy, guys, especially if you're new, so don't expect to master it. Again, we have clients that I work with that they're still mastering it. It's an ever-going evolution, I guess you can say. The more experience you get in the market, the more you start to filter out what you should be paying attention to and what you shouldn't be paying attention to. But the point that I wanted to give you here, and this is a valid trading opportunity. We'll see how the open goes, but I'll probably be entering this on the open. I would have entered Friday, but again, I was out of town, so I wasn't near my charts. But the key is you want to be realistic with what you're getting out of the trade, right? You don't want to shoot all the way for here, right? Because then you may just be wasting the trades. Now, there are certain trades where you can do that, but only when the underlying direction of the market or your underlying analysis is lining up with your trading opportunity. And again, we saw that in situations like the pound dollar, where we go over here and, you know, some may look at this and say, well, Akil, it didn't roll over all the way, so how is this a good trade? Well, if you look at our analysis, there was no reason to expect that we were going to continue all the way down here and push these lows, right? So when you enter a trade like this, right, you're looking to get a short bounce, right? A quick move back into previous structure. You're looking to get some money out the market, and you're looking to get out of it. Potential Gartley formation, by the way, if I just look at this real quick. There's my shiny thing syndrome kicking in. I don't want to get too off track here. That's a bearish Gartley. But again, knowing when to get out of the trade, placing smart target profits is a very important part of your trading, because you can miss a lot of trading opportunities doing so. You can also leave yourself at risk in a lot of trading opportunities by doing so as well. So the point of the story, and I'm rambling now, but the moral of the story of today's video is, know what type of trade you're entering. Don't just look at a chart and place random stops and targets on your chart. Know whether your trade is a trend following trade versus a trend continuation trade. Know whether it's a counter trade versus a counter trend trade looking for just a retracement versus a full reversal trade. And if you understand what type of trade you're in, it's going to leave you more educated on where to place targets, and that's going to give you more opportunity to actually put some money in your pocket before the market reverses and you know, it ends up either being a scratch trade or maybe even in sometimes in some instances a loss. So there we go. I think I'm rambling, but I hope that point was made. Let me know if it was. If it wasn't, I'll have to revisit the subject. But Aussie Canada, that's a trade that's on my radar for today. My kid's screaming in the background, so that's a cue for me to kind of wrap things up here. All right, traders, thank you as always for joining me again. And remember, I'm going to throw in some bonus footage of that rant on trading psychology in a brief moment, but got to remind you once again, get over to tradingpower.com, click that Learn to Trade tab, make sure you're on our email list. That way you can hear about this massive event as it nears closer, and you can start freeing up your schedule so you can attend it. And also head over to the link below and vote for me for Forex Trainer of the Year. Again, it'd be a massive help. It's a big support, and just I would very, very much appreciate it. So until next time, plan your trade, trade your plan. Have a great rest of your weekend, guys. All right. Your average professional trader is typically between 40 and 60% win rate. The best of the best people out there, the ones that have been successful, consistently successful years. Great years, 60% of the time. Bad years, 40% of the time. And bad, it doesn't necessarily mean losing money. And I think it's important to know that. It's important to know that because you got people out there that want you to believe that you need to be 80% correct. You're just not going to be 80% correct. Some people are. Some people have systems and strategies that are. Don't get me wrong. But the majority of people, you're not going to be 80% correct in these markets. And the key isn't winning as much as you can. You would think it is, but it's not. It's winning more than you lose. As far as when you win, your profits are outweighing your losses. You win big and you lose small. There's an old saying, it's keep your losers short and let your winners ride, right? That's how you be successful. Why people aren't successful? Because most traders do the exact opposite. They, instead of letting their winners ride, right, and cutting their losses short, right, they do the opposite. When price action goes against them, they move their stop back and they let their losses ride in hopes, right? I hope it turns around. I know it's got to turn around eventually. What goes up must come down. It's all about gravity. Oh, there's structure to the left here. Let's just get it a little bit higher, right? All that nonsense, and I know it because I've done it. Come on, guys. I've done it. Ain't no shame in my game. I've been there. I used to be a stop mover. I know the game, right? I'm just going to get it above the next pivot point. Yeah. Oh, no, there's a Fibonacci. Let's get it above that 618. Ooh, you know what? 124, that sounds nice. Let's get it above 124. A little bit above one. We know I need to give it a little bit more breathing room, right? 125. That's a better number. Let's get it. Oh, there's another pivot point up there. Let's move it a little bit higher. Oh, look, it's losing momentum. RSI is overbought. Let's get it a little bit higher. Give it some room. Right? And instead of taking a loss that's maybe 47 pips, you take a loss that is 182 pips. And then the exact opposite happens with your wins. You get that good trade because most traders don't have a problem finding winning trades. Again, there was a survey and a study done. Most traders win more than they lose as far as percentage-wise. But when they get that winner, right, instead of riding it down to full potential saying, oh yeah, 146 pips, right? Look at that compared to your loss, right? You can lose multiple times and this took it all away. But what do most traders do in this scenario? What do most traders do when they finally get that trade where the number goes from red to green? They take their profits early. They do the exact opposite. Instead of cutting their losses short and letting their profits ride, they cut their profits short and let their losses ride. It's insane. It doesn't make any sense. Does that make any sense when you hear about it? I know all of you guys have probably done it. When you think about it, does that make any sense? If you were to just put emotions aside, does that make any sense? It makes 0 sense. 0 sense. And this is why we say psychology is everything. I had an argument with this trader on Twitter the other day, right? This guy he was angry at something Jason Stapleton said and came after me. And he was trying to make the point that trading psychology doesn't matter. He's like, trading psychology, all this blah, blah, blah stuff, that's just BS. And I'm like, sir, when you say that, I understand you're open to your opinion, but when you say that, sir, I cannot take you seriously as a trader. And I started naming them. I'm sorry, so are you saying Mark Douglas is crazy, right? Brett Steinbarger is crazy, right? Alexander Elder is crazy. All of these great traders that have written, really, really good books on, you could add Mike Bellafiore to the list. Great books on the importance of trading psychology. Are all these guys idiots? And he's like, well, you get this thing. Well, a trading system is like a recipe, right? As long as you have the ingredients and you have the recipe, you should be able to cook up a good meal. And I'm like, yeah, that's true, right? If you have the ingredients, you have the recipe, you should be able to cook up a good meal. But you still have to execute it in the kitchen, right? What if you leave it in the oven too long, right? What if you take the chicken off too early and it's pink in the middle, right? What about all the self-sabotage that you can do to that meal? Because I'll tell you what, I can personally cook, but I know some people that can't cook to save their lives. And you can give them the best ingredients in the world and they'll mess it up. Especially when the pressure's on, right? What happens when you're cooking up this meal and you got the president? President stops by your house and says, you know what? I want to eat here tonight. Cook me up something good. And you're sweating and shivering and shaking, right? Is it as easy as just having the right ingredients and a recipe? No, because every damn person out here would be successful if trading was that easy. If trading was so easy that I said, hey, here's some rules, just do it, everyone would be successful. There's a reason why 80%, 90% plus are failing. And it's not a system. It's not a system. There's thousands of systems that work. It's not a system. It's the trader. So I'm like, I try to be as polite as I can to people, but I'm like, you don't know what you're talking about. And I think people like that, to his defense, I think maybe people like that, I don't know if he's successful or not, who knows? But people like that, maybe it comes easy to them. Maybe it's easy for him to follow rules and follow a system with, maybe he doesn't have any emotions. And that's great. That's a reason why you can be a very successful trader. But most people aren't like that. Most people aren't like that. I think I'm a pretty disciplined person, right? And I was ready to jump out a window the last 2 weeks while I was bleeding money in the markets, right? I've been bleeding market the first 2 weeks of January. I'm ready to jump out a window, and I'm pretty disciplined. It took a lot for me to sit back and be like, okay, you're not Akil, you're not doing anything wrong. We got what, 50 weeks left in the year or whatever. Relax, right? And because I did that, I was able to turn around. I'm having a fantastic week. It may be a 500 pip week. But most traders aren't going to make it to that point. They're going to when things get really, really bad, some type of mistakes are going to happen, and it's just going to get worse. Because I've done that for so many years. So anyway, we have our lower low, lower close. This is actually not a bad entry point. This would be the entry point I'd be looking for. However, I cannot personally enter right now because of the ECB press conference. So I'm going to have to wait until Draghi's done. That's a rule I put in a few years ago as the market started beating me to death during the ECB press conference. So we'll see what happens here. Let's go down to the 15 day trading time frames. And then we'll do one more pair. We'll do what? I guess we'll do New Zealand dollar next.